They told the world that Britain's empire was built on ships, soldiers, and colonies, but the true engine of its global domination was quieter, subtler, and hidden behind marble facades and mahogany desks. It was a financial system unlike anything the world had ever seen, a system that transformed debt into power and money into empire. Britain didn't just conquer with muskets and cannons, it conquered with credit, and the bankers of London turned war, trade, and even famine into tools of financial expansion. The story of how Britain's bankers financed its global domination is the story of how money and power fused, and how that very system continues to shape the world you live in today. To understand it, we must step back to the 17th century. England then was not yet the mighty empire we imagine. Spain and Portugal held vast overseas territories, France was on the rise, and the Dutch Republic dominated global trade with its formidable navy and sophisticated financial markets. England, by contrast, was small, fragmented, and perpetually short of money. Wars against France and the Dutch had drained the treasury. Kings borrowed heavily and defaulted often, scaring off lenders. By the late 1600s, England's credit was a disaster. And without credit, you could not fund an army, build a navy, or project power abroad. Then, in 1694, something happened that would change the course of Britain forever. Parliament approved the creation of the Bank of England. On the surface, it was simple. Wealthy investors would lend money to the Crown to finance a war against France, receiving government bonds with steady interest in return. But beneath the paperwork lay a quiet revolution. The bank institutionalized debt. It transformed the shaky promises of monarchs into tradable securities. For the first time, the English state could borrow reliably, at lower rates, and on a massive scale. This was the hidden weapon of empire. With a stable system of public credit, Britain could fund wars long after its rivals went broke. France, Spain, even the mighty Dutch struggled under crushing borrowing costs, while Britain tapped its deepening bond market again and again. Every war became a financial contest, and Britain had figured out how to rig the game. Take the War of the Spanish Succession in the early 18th century. Britain, a relatively small island nation, maintained armies on the continent and fleets at sea for over a decade, not because it had more resources, but because it could finance the fight through a steady stream of loans backed by the Bank of England. Investors trusted the bonds, taxes collected from trade and industry guaranteed repayment. France, meanwhile, defaulted repeatedly, forcing it to pay crippling interest. By the 7 Years' War in the 1750s, Britain's borrowing had reached astronomical levels. It raised over £100 million, enough to finance campaigns across North America, the Caribbean, Africa, and India. France, larger and richer in theory, could not keep up. Its financial collapse laid the groundwork for revolution, while Britain emerged with a global empire and an investor class enriched by steady bond interest. War had become not just a patriotic enterprise, but a financial opportunity. Trade, however, was the other pillar of Britain's financial dominance, and bankers were at the center. The 18th century saw the rise of joint stock companies, notably the East India Company, a hybrid of corporation, government, and military power. London investors bought shares, expecting profits from spices, textiles, and opium. Those profits came from conquest. Private armies bribed rulers, and taxes extracted from millions of people in India. Revenue flowed back to London, enriching bankers and bondholders alike. Britain's system created a feedback loop. Debt financed war, war expanded trade, trade generated revenue, revenue repaid debt, and repaid debt encouraged more lending. Admirals and generals captured headlines, but the real empire builders were the bankers who kept the credit flowing. By the early 19th century, the system had reached new heights. During the Napoleonic Wars, Britain borrowed over £600 million, funding armies and fleets while France relied on plunder and forced contributions. Interest payments consumed nearly half of government expenditure, yet investors kept lending, confident in Britain's trade networks and growing industrial economy. Financial resilience, not just battlefield prowess, won the day. But empire building through finance had a darker side. The British taxpayer bore the cost through taxes on goods like tea, sugar, and tobacco, while bankers grew ever more powerful, dictating terms to governments desperate for funds. Money and power were inseparable, and Britain had perfected the formula: debt as a weapon, trade as fuel, finance as the engine of empire. The Opium Wars revealed the system's ruthlessness. Britain had an insatiable appetite for Chinese tea, porcelain, and silk, but China demanded silver. British financiers solved the problem by selling Indian opium in China. When the Chinese resisted, Britain sent its navy. The resulting treaties opened Chinese ports and returned profits to London. Finance, trade, and military power intertwined, enriching investors while enforcing imperial control. By mid-century, Britain was both the workshop and the banker of the world. London financed railways in Argentina, mines in South Africa, plantations in the Caribbean. Sterling became the global currency. Through the gold standard, Britain projected stability, attracting global capital while imposing financial discipline on other nations. The system created winners and losers. Investors profited enormously, while colonized populations endured extraction, famine, and exploitation. The pattern is clear. Britain's global dominance was not solely military, it was financial. Risk transformed into opportunity, disaster into dividends. Wars that bankrupted rivals enriched bankers. Trade deficits became monopolies. Even crises offered avenues for expansion. London financed America's railroads. French debts fueled revolutions. Global economies bent to British credit. Today, the same principles persist. Governments borrow trillions, conflicts are financed with debt, and investors profit from crises. Quantitative easing, sovereign bonds, international bailouts, all are echoes of the London playbook. Control over credit equates to control over nations. Britain's bankers understood this centuries ago, and the system they created still rules the world. The lesson is uncomfortable but vital. Real wealth lies not in resources alone, but in the control of finance. Those who issue the debt, dictate terms, and manage capital flows shape history. Understanding this is not optional. It is a shield against exploitation. Recognize when inflation, debt, and crises are engineered for others' profit. History does not repeat mechanically. It evolves. But ignorance leaves us vulnerable to the same forces that built empires and crushed populations. Knowledge of money and power is the first defense. Britain's empire may have faded, but its financial legacy remains. Who wields that power today, and what role will you play in the system it created? If this perspective resonated with you, subscribe to our channel. History has the answers. You just need to know where to look.